Okay, so let's start with the gold and see what is happening there. So you know, guys, our way of analyzing the charts. You know our way of analyzing the charts. So I'm still trying to open gold here. Okay, there we are. So you know the way of analyzing our chart. It is that we look firstly at a bigger picture of the market. In this case, it is my 4-hour time frame. So we have to understand what is actually happening ahead of us, or what are the big traders doing, or those guys using bigger time frames. We need to know what they are doing so that we don't find ourselves doing something different from them. Because if you are trading in a lower time frame, you need to know that respect is required for the time frame that is above your time frame. So what we can look here, we are just going to observe this structure here. We are not going to go more on the previous data, so we're just going to observe this structure here. So what is observable, you can see okay, let me change this. You can see that the major downward move, it began here and it ended down here. And the way it ended here, it ended with a pattern break, this flow which was going on the downside, which was broken here, around here. And if a downward flow is broken, guys, you need to know that it is then a sign that the market is going on the opposite side, meaning that here it was a sign that now the market is going on the opposite side. But there is something that I want you guys to pay attention into. There's something which you spoke about a while ago, which is territories. We spoke about buyers territories and sellers territories, meaning where the major move begins. For an example, here we had a beginning of a major move, and then here again we had sellers here, the sellers who took the price here to all the way down there. So they took it in this region here, you see. Same thing applies here. This is also another territory where the buyers took the price up to where it is right now, which is here. So what does that mean? So you can see that these shaded areas, these are the areas that we respect the most as traders. These are the areas that we respect the most, meaning we can play around all those other regions, but these regions, these are the regions that we respect the most. So seeing that gold is going up, which it started here on the downward pattern break, however, there is no buying action that we can take now. Why? Because, where is the thing? Because the price is just approaching the region of the guy who took the price here all the way down to this point. So the price is in the seller's territory. This guy who sold here, it is in his territory. So that's why now if we are to go on our lower time frame, that's why we have a pause or a reaction on the price. You can see that price is reacting right there on the seller's territory. These are the territories that are visible on the hard time frame. So here, that's where the seller took the price all the way to down here. So now here you can see that the price is reacting from that territory. So what I can say is that the major thing started here. Okay, let me highlight. The major thing started here, whereby the market was moving up just good, but then it started to slow down here. Why? Because it was closer to this region. Unfortunately, it was able to break out again here and go up. However, going up cannot mean that now the buyers are active or the buyers are leading the market. So what will enable us to take decision right now, it is either price reacting on this area as it is doing now, or price breaking this area, and then we are going to buy above it. So now what we can do in this asset as traders, we should be looking for two things: either price reacting here in a form of showing you downward momentum increasing, or seller's momentum increasing, and then you are in it for a sell, or you wait for the price to break out this seller's territory and go above it. So okay, let me just erase everything and just clarify another important thing. However, if you are a scalper, because now price is in that territory that I marked here, which is the seller's territory, it means that it is likely that price is going to react going down as it is right now. But if you want to trade this currently, you need to make sure that you also take note of these resistance level here, which is highly possible that this resistance can turn into a support and price bounces and goes all the way up. So if you want to trade, or if you're interested in trading as a scalper, now this is just a signal for scalpers. You can sell down here and close your profits towards this area here and put your stop loss above this high. But remember the issue of closing trades, that we don't close trades because we have set a level here. Maybe because we want 20 pips, if it's 20 pips, we want 50 pips, is it 50 pips? We close because of the price action. What is the price telling you? So you do what the price is telling you, not your targets or what you want to make today. No, you just follow the price. If the strength of the sellers decreases, or if it shows signs of reversing here, it means that you should close your trade here. Don't wait for your trade to come here, because it might not even reach this level. So it's a matter of the price action. And another interesting factor, it is this indicator down here, which is showing you that the price is now overbought, So you can see here, it is showing you that the price is overbought in the lower time frame. So that's why I say you can sell this right now and put your targets all the way down here and your stop loss all the way up there. So are we still together? So you can just respond if you are still together, anyone, so that I can proceed. Are we still together? Yes. Okay. Thank you, Emmanuel. Thank you, Mark. So let us proceed. Let us proceed. So what's the symbol name of USD here? Is it just USD? Yeah. Okay, here we are. So what we are going to do here, okay, those who are just joining, or those who have joined later, you can recommend pairs that you want us to analyze. So that I don't just analyze maybe pairs from my choice. Let it be your choice. This meeting is yours. So okay, let us look at this one. So we are going to look at it in a bigger picture and see the key levels and see everything that is happening. So it is an interesting market here. We can see that we have now we have a market shift, meaning we have a shift in market strength. Here we had a very, very aggressive market, and here we are now having a market that is slowing down. So it's still an uptrend. Here it was still an uptrend. Same thing applies here. It is still moving up, but however, these are now two different uptrends. This is a strong uptrend, and now this is a weak uptrend. So this is a weak uptrend, this is a strong uptrend. So what does it mean? What does it mean when you see something like this? When you see a market transition like this, when you see the market moving from aggressive into a slow market, remember there is one thing that you need to know, which I once taught about trends. It is that usually a strong trend, or a very, very aggressive trend, it doesn't last long. And a weak trend, it is a trend that usually lasts a bit longer. So what you need to understand is that, remember that we have three types of strength in trend. We have the stronger one, we have a moderate one, and then we have just some kind of a weak trend. So if you see this kind of a trend, which is this one here, you need to know that the market, it is not that much volatile, or the market, it is not meaning, let me put it easy. In this case, it is buyers. So here, the buyers, they are not that much aggressive. They are not that much aggressive. It is just a steady market which is going up in a steady way. So what we are going to look now here, we are going to first spot our key levels, or where the market first took decisions. So it is here. This is where the move started, or the trend shifted. Although the trend began down here, but the market shift was up there. You see, where it shifted into this kind of structure. So we are going then to draw our trend lines or our channels based on this structure. We are going to forget about the previous one because it finished, that moved finished. So here we have this kind of a channel right now. We have this kind of a channel right now. And the interesting thing is that, remember, a channel, it is just here to show you the flow of the market. So here you can see that the high that we have now, it is no longer in the place, or it is no longer closer to the resistance line that is from the channel. So which can tell you that now the buyers are getting weak. Now the buyers are weak compared to their previous move. For an example, remember when I talked about momentum, those who have been there for a long time ago, but those who are new, I think we're just going to get it quickly. So when it comes to understanding momentum, remember that we spoke about a lot of things. We spoke about considering the waves. We spoke about considering the size of the candles. We spoke about considering the number, meaning the quantity of the candles. So it is the wave, it is the size, it is the quantity or the number of the candles. So now looking here, you can see this move here, comparing it with this move here. You can see that here it took the market a very, very long time for it to reach this high, which is just a bit higher than the previous one. Let me just put a horizontal line, which is just a bit higher than the previous one. But this move here, it took it a short period of time. That's why you can see they are green candles, and some of them are very big, but this one, it is a combination of green and red candles, which are smaller in size and many in number. So the many, if the candles are many in number, it means that there is a struggle. So it means that buyers are struggling here to push the market up. So that's why this channel here, when we see an ascending channel, you know the laws of price action, that an ascending channel might mean that the market is going to break out on the downside. Why? Because if the channel is ascending like this, and if it is getting narrow and narrow towards the edge, it means that now the buyers are getting weaker. So same thing applies here. There is the buyers are now questionable. They are no longer aggressive as they were in their previous wave. So we are expecting some kind of a breakout here. Some kind of a breakout here. So okay, let me just go to the lower time frame and see if there is any action that can be taken immediately. So here is the lower time frame. So you can see in the lower time frame that it is now clear that we really indeed have a downward reversal move here. If you are to categorize this in form of patterns, you can be able to spot a head and shoulder pattern here, where you can see that now we had the higher high, and then the next high, it is lower, the next one it is lower again. So the right way to enter, you can still sell here, but what you should be careful about is that you should make sure that when you sell, you always sell after a corrective. For an example, it would be better if you sold somewhere here or somewhere here or somewhere here, just after the corrective, because our way of entering a trade, it is through a pattern break, meaning this upward pattern here. Once it is broken, we enter. And also this small pattern here, once it is broken, we enter. So you can also, if you just want safety, you can wait for this market to just form some kind of a pattern here or a flag, and then you wait for this pattern to be broken. As soon as this pattern is broken, you then enter your cells, going all the way to the downside. So that's it for this pair or for this instrument. So let us check another one. I've kept a lot of people waiting. GBP USD. Okay, we are going to check GBP USD. So I welcome you guys, those who are joining now. I welcome you this beautiful meeting. We've been analyzing these currency pairs right here, and if you have missed any, don't worry, this will be posted right after this meeting on YouTube, so you will be able to refer into it. So don't worry, you'll be able to refer on our YouTube channel. So I'm just going to post it right there. So we are going to GBP USD. There we go. So we're just going to look at it in a bigger picture first to see if there is something that we can get. So okay, in this bigger picture here, there is something interesting. Okay, there is what we call market activation. For an example, you really know that sometimes when the market is in a range, or when the market is slowed down, for an example, in such a manner like this, when the market is slowed down, you remember that we usually face a challenge when it comes to breakouts. We usually face fake breakouts, and we suffer spikes and all those things. So that's what we call market activation. When the market slows down, and then it has to be activated so that it will take direction again. So here we can see that the market was all the way slow. It was very, very slow in this region here. It was very, very slow until it was activated here, where we have this move here, which is not clear on which side is it going, because we have this low here and we have that high here. So while price is between that high and this low, it is still not a decided market. So the market is not taken direction yet. We don't know if it's buyers or sellers market at the moment, because it was a push on the downside, and it also was a push on the upside. So we don't know which direction this market has taken yet. But the interesting part, it is the market activation that I just told you about, that now the market has activated the traders. Every trader now is interested to partake in this market, yet here there was no trader that was interested. So now, because every trader is interested to partake in this market, that's where we are going to see decision coming in. That's where we are going to see direction coming in, meaning now we can no longer see something like fake outs or fake breakouts, because already it has happened. A lot of people thought that it was breaking towards the upside when it broke these highs here. some thought that it was breaking towards the downside here when it showed these big candles by breaking these lows here. So now the market has already dealt with traders who are fearing to miss out. So now what you should be looking at as a trader, you should be looking at the next high. Where is the next high going to be formed? Where is the next high going to be formed? If it happens that the next high is formed here, you need to know that, okay, now it is seller's market. If you see the next high being formed up there, then now it is buyer's market. So based on a bigger picture or based on a higher time frame, there is no decision that you can take at the moment. There is no decision that you can take at the moment. Okay, someone is saying, can you analyze it on a daily chart? Okay. The reason I'm not analyzing on a daily chart, it is that a lot of the traders in our group or in our community, they are intraday traders, so they are not long-term investors. So that's why we just end on the 4 hour, but there is a slight difference from the 4 hour and the daily. So the purpose of this, it is just to give you guys the idea of how we should go about analyzing the market. So based on a hard time frame, currently there is no decision that you can take, but maybe if we can go to a lower time frame, maybe we can see something. But for now, we cannot take any decision. Why? Because we are already late. The market is just in the middle of nowhere. We don't know if it will push all the way up or it will push all the way down. So there is no decision we can take yet. Okay, let us just jump to the 30 minute. So you can see that in the 30 minutes now, you can observe that there is a structure in terms of the market moving up. So the market is moving up actually in a just a small trend that you can draw here. Let me just magnify the picture for you. So here it is. You can see that, okay, it is moving in a form of an uptrend. So now, however, you can take chances as a trader who is using a smaller time frame. If you are using a smaller time frame, you can take chances by actually observing two things. However, I want you guys to remember what you spoke about in the pair that we analyzed at first. Remember the territories. Remember that. Keep that in mind that here you can see that it was low and all of a sudden there was a seller who took it here all the way down to this point aggressively. So this is also some kind of a key level in a smaller time frame. But what can make us to really despise this key level, it is actually the strength that the market is using to approach it. You can see that it is using so much strength compared, you see, this wave is weaker compared to this wave. That is information. So remember, the purpose of key levels, it is to see how price reaches those levels, not actually to see price touching support or resistance, but we see how did the price touch the support and resistance. So now what you can do as a trader in a lower time frame, let me just clear my screen. What you can do, you can either take chances based on trendline trading, that, okay, I'm going to wait for price to bounce here and then I'm buying. But what if price doesn't bounce here? Then you have to use also another form, which is trading a retest, where supports become resistance and resistance becomes support. So meaning this resistance might change to become support, meaning price might move down here and bounces in this level and go up. So it's two options. That's what you can do. But remember that your targets shouldn't be very, very wide or shouldn't be very, very big. And remember that here is our limit. Here is our limit. So you don't have to have a huge target. So that's what you can do in this pair. So let's check another one. What can we analyze? Let me just check USD card. So we are left with few minutes. We are left with few minutes. Okay, let me analyze this one and then you can ask questions. Let me check what I can analyze. or let me just deal with this one that I've opened. Let me not escape from it. But I hope, guys, this is making sense. I hope this is making sense. So now here is another funny market. Here is another funny market. You can see that the market is just going all the way down with very small waves. It is going down with very small waves. There was a teaching which I once made. Whereby we spoke about very active or very volatile markets, and then markets which are not that much active, where we see a lot of small candles, where we see very small waves. Here you can see that you can barely see waves. It is hard to spot your waves here in terms of correctives and impulsive. So when you encounter such a market, remember one thing, that you need just to spot a small structure. It is just a matter of small structures. For an example, here, very small structure. Even here, very small structure. Same thing here, same thing here. Meaning, in terms of how the market corrects, it corrects in a very small structure that you can actually ignore. For an example, here, you can see that already it has started correcting. And it can happen that the correction can just end here, and all of a sudden the market continues to go down. So you shouldn't wait for something big. That is significant. Just this small structure. Once you see something small, and once you see that structure being broken, that's where you just enter without asking any questions. So the reason we are ignoring this right now, that it is oversold, it is that, remember, when it comes to oscillators, we use them with the trends. We use them with direction. If we see sellers stronger here, if we see sellers becoming stronger, there is no need for us to consider this, even if it tells us that the sellers have sold so much. It is oversold. There is no need for us to obey this currently. Why? Because in the price, there is no sign of sellers getting weak. But once we see sign of sellers getting weak, that's where we respect even this guy right here. That's where, so this can be just a sign of the corrective. But once we see something like this, the corrective becoming bigger than any other previous corrective, that's where now we can have questions and say, what is happening in the market? That's where we can now have questions and say, what is happening in the market? Once we see this corrective becoming bigger, that's where we say, okay, now we can see this guy warned us. But as long as the sellers are strong, we ignore the warning of this guy. We can only receive it if we want also to exit our trade, because I once thought about oscillators that we can use them to enter and exit our trades. So maybe if someone sold all the way up here or all the way up here, then he can be closing his trade now because of the oscillator, but not actually entering his opposite trades or entering his buying trades. So there we are on a bit lower time frame, the 1 hour. You can see that the structures, they become more visible. So when you are analyzing your pairs, let it not end in the higher time frame. Always go down to the lower time frame so that you can see the bigger picture, you can see the structure. So that's it, guys, when it comes to market analysis using price action. So we're just going to keep it short today, but if you have just any question, you can just type it quickly and I'll then answer you. If you just have any question before we run out of time. The reason I'm not using the microphones is to prevent any interruption in terms of the network. Today my network is not stable, so can you analyze it? Okay, I read this one. So if you have any questions, guys, you can just post it. You can type it right now so that I will just answer you. Can you analyze, can this analysis work on volatility indices too? Okay, yeah, it can work. It can work in any market. So It doesn't matter what you are trading. It doesn't matter what you are trading. The principle is the same. The principle is the same. This is me. What I'm using, it is just momentum. I respect strength in the market. So my price action is founded on strength. Its base, it is strength, market strength. Which side is stronger? Then I go with that side. So you can just use this method in any market. You can just use it in any market. There is no discrimination. Any market, it can work. So yeah, guys, thank you for joining. Thank you for joining. I think we're just going to end it here. I think I'm going to end it here. So I'm going to post this on my YouTube channel. It is Pti Forex. Yeah, it is Pti Forex. So I'm going to post it there. Just now, I'm just going to save the video and post it there without any editing. So you will refer to it in terms of analyzing. And until next time, we are going to be updated, guys, on when we are meeting. And also the topic on what we are going to be discussing. So thank you for joining. I wish you all the best in your trading. Enjoy, and have a wonderful day if it's a day, and have a wonderful night if it's a night. So thank you guys for joining. I love you all.